Hey everyone, I'm Steve Johnson, Chief Investment Officer at Forager Funds, and Gareth Brown, Portfolio Manager on our international fund, is here with me to talk Twitter today. We wrote the stock up in a recent quarterly report, probably a name familiar to you already, but the investment thesis is very interesting. The share price has run up some 80% since our purchase. But in this market, Gareth, where everything's hot, I wouldn't read too much into that in terms of the actual investment case working out. But you've seen some pretty good news.
The long story for Twitter has been that it's been under-monetized. And that's the argument between the bulls and bears for at least 5 years has been around whether it can monetize. Our thesis when we bought sort of more than 6 months ago now was that there's a thing called the ad stack. It's basically a big chunk of technology of code that the rest of Twitter hangs off. And it was a big monolithic block of code. And so trialing new things in Twitter was fraught with risk, that you would bring the whole system down. And so everything was prioritized and tested, and it just took a long time to innovate. And one of our theses back then was that the new ad stack was more modular, and they would be able to iterate, as they call it in Silicon Valley, experiment much quicker. And we've seen a lot of evidence that that is going on right now in terms of its ability to try new things, and that's part of the bull thesis here.
Yeah, just anecdotally, I was talking to a marketer last week who had been talking to their digital agency who were very, very excited about Twitter, which was a platform that they hadn't been able to get to use, hadn't been able to get to work before in terms of targeting their specific type of people that they were after, but have been having a lot of new success with these new products that Twitter is offering up. And it's not just that traditional piece. I think that's the biggest upside, but there are new products coming there as well.
So the brand advertising is traditionally more than 80% of the revenue here. That is going strong. There's a whole bunch of new alternative revenue streams that they're considering, like subscriptions. And then you have, if they crack the targeted advertising side of things, then you've got significant upside.
We've got a chart here up on the screen that is the long-term growth in users of Twitter. It's never been the problem. As you can see, it's always been growing quickly. But if we can combine those growing users with a rapidly growing revenue per user, we should see some pretty good outcomes at the bottom line.
That's the thesis.
It's a market where everything that goes in goes up at the moment, and we are really focused here on making sure that our investment theses are playing out rather than just getting excited about share price rises. But Twitter is one where both seem to be headed in the right direction. Thanks for tuning in.